Hello traders, good morning. Let's get started. Thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. First, a disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I'm a certified LFA analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elliott wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. Okay, these are the topics that we are going to cover inside today's webinar. Okay, let me talk about macroeconomic events and data releases. I'm going to cover previous week fundamental analysis. Okay, let's start with the ISM Services PMI EURUSD. Okay, what is ISM Services PMI? The ISM Services PMI stands for Purchasing Managers Index. It is a key economic indicator that measures business activity in the USA service sector. This index is based on surveys of purchasing managers in industries such as finance, retail, healthcare, and other services based businesses. Since the services sector represents a major portion of the US economy, the ISM Services PMI is an important gauge of economic health. This index is calculated based on several components, including business activity. Now, the business activity basically measures overall growth in the service sector. We also look at the employment, which indicates hiring trends in service-based companies. New orders reflects demand and future business conditions, and prices paid, a gauge of inflationary pressure within the sector. Now, a reading above 50 usually indicates expansion, while a reading below 50 signals contraction. The report was released on March 5, 2025. So on March 5th, 2025, the ISM Services PMI was released with the following figures. Previous number was 52.8, forecast was 52.5, and the actual number we got is 53.5. The stronger than expected reading of 53.5 suggests that the US service sector continues to expand at a healthy pace, which is generally positive for the United States dollar. Okay, so overall analysis is that the ISM Services PMI coming in above expectations indicates that the services sector remains resilient. This typically suggests a steady labor market supporting consumer spending, less urgency for the Federal Reserve to cut interest rates in USA, and the positive sentiment about United States economic growth. However, despite this favorable data, Euro USD moved higher instead of lower. Let me show you the chart of Euro dollar quickly. So over here you see the Euro dollar, it's rising up. Okay, we got a nice bullish leg. Let me go back to the PowerPoint presentation. So this suggests that the other fundamental or technical factors influence the price action, and the potential reasons include profit taking by traders who had already anticipated a strong report, broader market sentiment shifting away from the USD, expectations that the Federal Reserve might still lean towards rate cuts later in the year. So the effect on the euro dollar is normally a strong US economic data would boost the United States dollar and push the euro USD lower. However, in this case, which I was showing you earlier, the euro USD rose, indicating that traders focused on other factors such as risk sentiment, Federal Reserve policy expectations, or technical price action. Now, as far as the technical price action is concerned, we got a bullish breakout above the old swing high over here, and after that, price action just keep going up, up. So the conclusion is, while the ISM Services PMI beat the expectation, the Forex market often moves based on broader economic narratives and positioning. The Euro USD upward movement suggests that traders were either pricing in future US dollar weakness or reacting to other external factors beyond the report itself. As always, traders should consider multiple fundamental and technical factors when analyzing currency movements. Next one is the unemployment rate data report in Canada that is directly related to United States dollar versus Canadian dollar currency pair. The unemployment rate measures the percentage of unemployed individuals who are actively seeking jobs within the total labor force in the Canada, and it is a key indicator of labor market strength and overall economic health. A lower unemployment rate generally signals a strong economy, while a higher rate indicates potential economic slowdown. The unemployment rate affects central bank policy, as higher unemployment could lead to interest rate cuts to stimulate growth, whereas low unemployment rate might push uh, the interest rates higher to control inflation. Now, we got the report on March 7th, 2025. Let's do the report analysis. The previous number was 6.6. The forecast was 6.7. It is actually in percentages. The actual number we got is 6.6%. So at first glance, the Canadian labor market appeared stable, with the unemployment rate remaining unchanged at 6.6%, slightly better than the expectation, 6.7. Okay. However, the USD CAD still moved higher, and after that, it seems to be it is trying to print a top. But on 7th, on March 7th, we got a bullish leg. So if I go over to the USD CAD currency pair, you can see that it went up a little higher, and now as of today, it's trying to print a top and it's trying to drop over here. Okay, but on that day, it actually moved higher. Now, the overall analysis is that the unemployment rate was slightly better than expected, but did not improve from the previous month growth. Okay, so the previous month was 6.6, and we got the same 6.6 actual. So, it's the same number. So, no significant labor market progress. Okay, if we have seen 6.5 or lower number, then we could say, okay, we got, less unemployment rate in Canada. So if wage growth or total employment change data were weak, this could have hurt confidence in the Canadian economy, but we got the same number. So broader US dollar strength due to global risk sentiment or expectation of a strong US economy may have contributed to USD CAD rise. The technical factors and market positioning could have influenced traders to buy USD CAD despite neutral unemployment data. Okay, so as far as the effect on the USD CAD is concerned, under normal circumstances, a lower than expected unemployment rate should strengthen the CAD, causing USD CAD to fall. However, in this case, USD CAD moved up, suggesting that the traders focused on other economic factors rather than just the unemployment data rate. So the conclusion is, despite Canada's unemployment rate meeting expectations and being slightly better than the forecast, USD CAD moved higher, likely due to broader US dollar strength, weaker underlying labor market details or market positioning. And this highlights the importance of weaker. This highlights the importance of analyzing the entire economic picture rather than just looking at a single data point when trading forex market. Okay, so previously we discussed about the euro dollar and GBP versus USD currency pair. So let's take a look at euro dollar right over here. I was expecting a bullish leg in euro dollar and we exactly got it. Regarding the British pound, I was also expecting a bullish leg or maybe a pullback. So overall, we got a bullish leg in pound dollar currency pair. Next, let's take a look at the current week macroeconomic events and data releases. Number one is the core CPI on March 12th, and that's directly related to United States. And the euro dollar is the most traded currency pair. Now, let me explain a little bit what is the core CPI. The core consumer price index, also known as core CPI, measures the monthly change in the average price of a basket of consumer goods and services, excluding food and energy due to their volatility. It provides a clear view of underlying inflation trends and helps in assessing changes in the cost of living. The core CPI is a crucial indicator for the Federal Reserve's monetary policy, as higher inflation may lead to interest rate hikes, strengthening the US dollar, while lower inflation can signal a weaker economy, potentially leading to rate cuts and a weaker US dollar. Now, on March 12, 2025, we are going to get the CPI, core CPI data. The previous number was 0.5%. The forecast is 0.3%. However, the actual data did not release yet. The market is expecting inflation to slow down from the previous months, which is 0.5% to 0.3%, which could indicate a cooling inflation trend in the US economy. However, the actual number will determine how the forex market reacts. The possible scenarios and impact on euro dollar would be if the core CPI is higher than the forecast, which is the forecast value is 0.3%. So if we get more than that, um, then that would indicate the inflation remains sticky or increasing the chances of the Federal Reserve keeping interest rate higher for longer. Higher interest rates strengthen the US dollar, leading to a potential drop in euro dollar as the dollar gains value against the euro. And market participants might anticipate a more hawkish stance from the Federal Reserve, reinforcing US dollar strength. Now, if the core CPI matches the forecast, then the reading is in line with expectation, would signal that inflation is moderating as projected, and market reaction could be neutral or slightly bearish for the US dollar, depending on how traders interpret the report. And if the CPI, the core CPI, is lower than the forecast, below 0.3%, that would be a weaker core CPI and would suggest inflation is cooling faster than expected, raising speculations about potential rate cuts by the Federal Reserve later in the year. So a weaker US dollar would likely cause Euro USD to rise as lower inflation reduces the Fed's urgency to maintain higher interest rates. And this scenario could boost risk sentiment in the market, benefiting assets like the euro. So the overall analysis is the higher than expectation inflation, meaning stronger US dollar, which means Euro USD is going to fall, it's going to drop. And a lower than expected inflation means weaker US dollar, which means Euro USD is going to rise. Next one is the gross domestic product GDP that's related to the United Kingdom. And the most affected currency pair is going to be the British pound versus US dollar, the GBPUSD currency pair. Okay, let me explain a little bit what is GDP. The gross domestic product GDP measures the monthly change in the total value of goods and services produced within the United Kingdom. It is a key indicator of economic growth, business activity, and overall economic health. A higher GDP reading signals stronger economic expansions, which can lead to higher interest rates and a stronger British pound. Conversely, a weaker GDP suggests economic slowdown, which could weaken the British pound as expectations for monetary easing increase. Now, the March 14th, 2025 report expectations is the previous number was 0.1%, forecast is 0.4%. The actual data did not release yet. The market is expecting UK GDP to grow at 0.4%, which is a significant improvement from the previous 0.1%. Previous number was 0.1%. The expectation in the market is 0.4%. So if the actual GDP figure aligns with or exceeds the expectations, it could be positive for the GBP and drive GBP USD higher. Now, if you take a look at the price chart of GBP USD currency pair, right now you see GBP USD is actually flying high. It's moving up, and the way I see it's probably going to rise up further towards 1.3049 level. Now, if the GDP matches the forecast 0.4, that is basically in line with the forecast, which would confirm expectations of moderate growth. A market reaction may be neutral or slightly bullish for GBP depending on broader economic sentiment and central bank outlook. Now, if the GDP number is lower than the forecast, below 0.4%, it means a weaker GDP reading would indicate that the UK economy is struggling to gain momentum and raising concerns about slower economic recovery. This could obviously weaken the British pound, especially if the BOE is expected to ease monetary policy in response. The GBP would likely decline as investors shift towards the safer US dollar. So the overall analysis is the higher than expected GDP number means stronger GBP, which means expect more upside in GBP USD currency pair, and lower than expected GDP, meaning a weaker GBP, it means GBP USD is going to fall. So we will see what's going to happen on March 14th, 2025 when the actual GDP report comes out, which is going to affect the British pound versus US dollar currency pair. Next, let's take a look at global market trends. I'm going to talk about the euro dollar, British pound, Australian dollar, and the spot gold. So let's go over to some price charts and see what's actually going on in the market. Okay, let's start with euro dollar and British pound. So let's start with euro USD. Price action just keep printing lower, keep printing higher swing highs and higher swing lows. If I remove all of these lines and go over to a monthly time frame, you see we actually printed a bottom over here. Let's take a look at weekly time frame. This is where we got the bottom. If you draw a Fibonacci retracement level, let me see if it's there or not. Fibonacci retracement. Let's see. Okay, okay, here it is. It's up here. Fibonacci, this one is the expansion. This is the, okay, this one. I'm going to change the color over here. Okay, right over here, you see we got a hit at 0.618% or 61.8%. So price actually bounced from this level. The chances are high that euro dollar is going to rise up further in coming trading days. That's a long-term forecast. If you check out the daily time frame, I'm going to remove all of this. You see price action is going up. So the next top or the next resistance level is 1.0937 area. So price action is most likely going to hit this level. Then it's probably going to find some resistance over here. Let's take a look at Fibonacci expansion. So if we take these, okay, I'm going to redraw it again. Okay, it already exceeded 1.618 level, so it's probably going to print a top soon. Let's take a look at a 4-hour time frame, and I'm also going to add some oscillators over here. Go to I'm going to use the RSI, relative strength index indicator. So this is the 4-hour time frame. Right now you see price action is moving up, but the indicator is not. This is known as divergence. It means that we're getting a bullish leg in price action, but the indicator is unconfirming the new high. So the chances are high that we're probably going to get a top sooner or later inside euro dollar currency pair. Let me remove all of this, go over to the daily time frame. I'm also going to remove the RSI indicator. So the chances are high that price action is going to find some resistance over here at 1.0938 level. Now, the chances are high that we're probably going to get a pullback at or around these previous resistance area, which is now going to act as a support at 1.0822. So somewhere around this area, that would be a spot to look for possible bounce or a buy trades inside euro dollar currency pair. Next one, let's take a look at pound dollar currency pair. I'm going to move on to the monthly chart first. Okay, this one is the monthly time frame. It seems to me price action is rising up. We got this pullback, didn't go below this low. Let's take a look at a weekly time frame. Same story, price action is overall printing higher swing highs and higher swing lows. So the way I see GBPUSD is probably going to rise up further. Even in daily time frame, price action is rising up. We're getting a nice bullish trend channel over here. Let's see. I'm going to draw another trend line. 1 second. Delete this line over here. Zoom out a little bit. Okay, we can draw this channel from this point as well. Okay, so you see we got a nice trend channel over here. I'm going to change the color to green, make the line a little bit solid. So it's actually testing the upper boundary of this trend channel. So the way I see, we might get a little bit pullback and then it's going to rise up more. If you check out the 4-hour time frame, chart is loading in the data. Okay, let's go over to the RSI, apply the RSI, relative strength index indicator over here. And you see we're getting same story like the way we got in euro dollar currency pair. We're getting some divergence over here. Okay, so price action is rising up, but the indicator is telling us a different story. Okay, so this means a loss of momentum is there. The upside momentum is warning. The chances are price action is going to print a top at least on a short-term basis and then expect a pullback. Next, let's take a look at Australian dollar currency pair, AUD USD currency pair. Okay, let's go over here. Okay, we have these two arrows. Okay, regarding the Aussie dollar currency pair, we got some sideways price action overall, but it seems to me it's trying to find a base or support, and the chances are high price action is going to rise up further. Next, let's take a look at spot gold. Spot gold, I was kind of expecting a top over here in gold. So far, price action is just hanging up there. Now let me discuss two trade setups that you can use, one in the Aussie dollar and second one in the inside the spot gold. For I basically expect Aussie dollar currency pair to rise up. So if we do get a bullish breakout at 0.6382 level, then it is going to open the door for further upside towards 0.6549 area. And watch out for a pullback at around 0.6231 level. If price action hit this level, that would be a good buy spot. However, this whole thing is going to become invalid if market is going to fall and breaks below this old swing low right over here. I'm going to push this one higher. So this is the area. And if market is going to test 0.6188 level, then the bullish scenario, the buy trade setup becomes invalid. Next, let's take a look at spot gold. Spot gold, I'm expecting the price action to fall. So as far as the sell trade setup is concerned, look for a possible breakdown in price action below 2830.55 level. This means do not jump into the market with a sell trade at the current price level. Don't do that. You wait for the price action to fall down first and then breaks below the old support level, and then drops further. That would be a nice sell trading opportunity, and it is going to open the door for further weakness in price action. And the spot gold is probably going to hit 2771.62 level in coming trading days if we do get a bearish decline. Now this downside, the sell trade setup will obviously become invalid if price action is going to rise and hit 2956.18 price level in spot gold. Okay, so these are the two trade setups. If you have any questions, feel free to type inside the chat box and I will be happy to answer your questions. So let's review what we have learned today. I discussed about the core CPI that is directly related to USA, and I discussed the euro dollar. Then we also discussed about the GDP, gross domestic product for the UK, and both of these financial news are going to come in few days time. I also mentioned the date and time as well. Next we discuss the euro dollar, pound dollar, Australian dollar, and spot gold. These are the assets that you need to watch out for profits. And I also discussed two trade setups, um, a buy trade setup in Aussie dollar and a sell trade setup in spot gold. Okay, so what you should do next is you can check out and visit the Trade Geek website. There are free trading courses available for beginners, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, March 18th, 2025 at 12 p.m. UTC time. So that's it for the time being from my side. Have a nice day and bye-bye.